I mean, I'm confused. What's going on? What is happening?
Well, I think we're all confused to a large extent, Jason.
Hey everybody, Jaysen Barlow with Sell for 1%, here with Dave Barlow, Jaime Barlow, and Rich Cercone with Equitable Mortgage. Here to talk about this week, June 14th, the Fed conclusion of their two-day meeting and what the fallout will be from this meeting. Rich, I know that the Fed did not raise rates, which on its surface may look like a great sign, but then the comments from Jerome Powell indicate we're probably not going to cut rates significantly for a couple of years. But that conflicts with what the Fed was in their remarks, not Jerome Powell, but, the signals from the Fed are that we are going to start cutting in 2024 and 2025. Rich, as someone who watches this, I mean, I'm confused. What's going on? What is happening?
Well, I think we're all confused to a large extent, Jason, and I think maybe the Fed is confused a little bit as well. But you're right; they took a pause, and the statement behind taking a pause was that, as we mentioned in our last meeting, that the rate increases are lagging indicators, and so they referenced the lag and the fact that they wanted to see the effect of it continue to filter into the economy, and so therefore taking a pause. But there were and I don't remember the numbers now, but there were at least 2 or 3 Fed governors who feel that they have another couple of rate increases still to go, and there was 6 or so that felt that they may have even more than 2 more rate increases to go. So it was even though the fact that they paused was dovish, the statements were very hawkish into the future. Now, what we're seeing this morning is a little bit of a rally. You're seeing, I'm looking here at the stock market. Stock market is rallying a little bit this morning, and the mortgage-backed security market is also rallying this morning slightly. I don't mean we're talking about major moves in rates, but we at least are not getting worse today, as I was fearing we may. So we're seeing a little bit of a turnaround, and I think it's because people are starting to feel that even though they're saying they're going to continue to raise rates, I think that the markets are starting to get the idea that, wow, this may be over sooner than later. China cut rates this morning. The European Central Bank raised rates this morning, and Lagarde, who is the chairman of that central bank, was very hawkish about continuing to raise rates. She didn't mince any words at all. So we have a lot of mixed signals out there right now. But in general, I think that people feel that the economy may be ready to turn over a little bit, and therefore there may be a reason to continue this pause into the future. So we may see 1 more rate increase, we may see 2, but the market's thinking we're not going to see a lot more of this, and at some point, I don't know if it's 24 or 25, they'll start to lower rates. I think they're data dependent on that, depending on what the economic data says. I think they'll react in that way.
So the interesting question, for me, is what is the real inflation rate? Because, we're seeing things kind of bounce around out there that it's at 4%. And then, I've read some articles that, well, 4% is on top of what, the real inflation rate is, that it's just not going any higher. And so that was one of the things that, CPI came out, it was lower than expected. The PPI came out, it was lower than expected, which is what caused this pause.
But what can you maybe elaborate a little bit on, where are we with what we would call real inflation rate? Yeah.
Gosh, that's above my pay grade, Dave.
Oh
But
boy.
you're going to need a better expert than me. But they keep monkeying with the statistics. We know the statistics can lie, and so they keep changing the way they report these numbers. Not just CPI, but all of these numbers are fiddled with in that manner.
Yeah.
We still have some inflation, of course, in the real estate business. We know we have huge housing inflation right now. I mean, the prices of houses are not coming down. And I think the message for the viewers is that, yeah, we have inflation, and yeah, you better hurry up and buy a house if you can get one, because they're going to be more expensive next year.
Well, that's been the case for some time now. I mean, since
Yeah.
2011, at the bottom of the foreclosure crisis, the average sales price here in Columbus was $157,000. Last month it was $340,000. So, unless it's just a total crash, I just don't see it coming down. Just inventory levels are still low, and so I know there's fewer homes going into contract. And Jay and I talk about that quite a bit. Less activity, but there's also not as many listings coming on the market. And we've talked about that, where I think most sellers kind of, have a hard time selling their home that's got a 3% interest rate that you sold them last year or 2 years ago. And maybe they want something bigger, or they need to downsize or do something different. They're moving, whatever it may be, but they're having a hard time selling the house and then going to a 7% interest rate. So what are interest rates here this morning, Rich?
Well, we had a rally in mortgage-backed securities here. So again, the rate can vary based on your circumstances, your debt to income, and your credit scores. But we're still high sixes, but it's not hard to get into the 7% range if your credit's a little bit askew, or if other factors might come into play. So, but most clients, I'm still able to get them into a 6.7 or 6.8 rate right now. But 7% is definitely. Last night we were at 7, but we've rallied a little bit this morning to we're about 6.8.
Yeah, the amazing thing to me is that, beginning of May, we were down close to 6%. Middle of May, 2 weeks later, we're close to 7%. And now the Fed has put a pause. It comes down a little bit. My hope is that we get back down into the mid sixes. And we talked about this a little bit yesterday in our team meeting, that if we can get down closer to 6, I think you're going to see the market pop pretty good.
What I don't understand is how prices are going to continue to go up, and the Fed is not going to raise rates more so. If prices continue to go up, they're going to view that as we can raise rates more.
Are you talking about like eggs and milk and stuff like that?
Well, none of that's come down. I'm talking about like real estate prices. Like right now in Columbus, like Rich is saying, we're up 9% year over year. And it's kind of defying all odds right now. I mean, in October, November, December, January, February, we were, plus 5%, plus 4%. We got down to plus 2% year over year, to where there was almost no increase in price.
You're talking about the average sales price?
Correct. Okay. And then when the spring market came around into, March, April, May, it went, plus 4%, plus 5%. Now we're up to, almost 10%. And so what I'm saying is the Fed may be pausing now, but if that kind of action is going on around the country where markets are picking up steam, we know that it's cyclical, that in the spring and school's out, this is when the market is hot. And, we also know there's an incredible shortage of new listings that are good and attracted to buyers, so that when one comes on that's affordable, buyers are still, paying top dollar to grab it. And so, I mean, that's what's really causing real estate price to go up. I don't know that I would attribute it to inflation. Like 3 years ago, I would have argued, well, prices are going up so dramatically because they're holding rates down so low. But right now, that's not the case. I mean, right now it is becoming, there is a supply shortage. We're afraid that rates and prices are going to continue to go up. We got to buy now. And so it's like, but the Fed is going to be interpreting the data as, well, we got room to raise rates still because the markets are still doing good. I mean, despite prices being up, we're still, churning. So I find it interesting. I just don't know where, it's going to go when it's all said and done. Like Jerome Powell said yesterday, Dad, I mean, inflation has not gone anywhere. So they've raised rates. They've left a wake of destruction with banks and everything else, bonds, but milk is still up. Eggs are still up. It's $4 a gallon of gas right now. Like the inflation may have stopped going up 10% a month, but it's still there.
There's a lot of wise economists who will say raising rates does nothing for inflation and maybe even causes more inflation because it becomes more expensive to do business. So, it's an axiom that's been passed on, but whether or not it really fights inflation is a question that some economists smarter than me are questioning right now, whether that's even the right way to fight inflation, if you will. If they stop printing money and they start drilling for oil, that would drive inflation down significantly in and of itself, rather than raising rates.
Let me go back to what you were talking about a few moments ago there, Jaysen. I think the one thing that you're leaving out of your equation is that here in Columbus, we are up average price. We're down on number of homes sold. How much? I think you did the numbers here. We're off like 25% or something. I mean, it's a big number. It's not a 1% or a 2%. It's a pretty good size number. But the thing to keep in mind, Columbus isn't the normal market that's around the United States. There are a number of markets that are depreciating in value. And so I think you got to keep that in mind when you're looking at a national average. And I haven't seen the Realtor, NAR with their numbers as to where are we. They normally come out with Eastern, Southern, Midwest, and West. And then they, kind of say, well, the Western markets are down, Southern markets are down, Eastern markets are down, Midwestern is up. And, I think Midwestern, because you have, cities like Columbus, Indianapolis, Pittsburgh, Cincinnati, those cities are up, but a lot of cities across the country are down. So just, kind of keep that in mind. So where do you think rates are going to go, Rich?
I don't see, based on what we're seeing, I don't see like dramatic drops in rate here for the summer. And I think they're going to be data dependent after that. I think we're probably, we're going to hopefully be able to hold it in the sixes. We could flirt with 7, a few times. We're flirting with it slightly now, like I said, but it would be over optimistic, I think, to think that we're going to see 5s on rates anytime soon. But that could change quickly. Everything can change in a minute. It's that, you watch CNBC and one morning it's this and the next morning it's something completely different. So anybody's guess, but I don't see any drops in rates anytime soon right now. Just minor, eighth or quarter one way or another in rate.
So what's the next reports that we will be looking at that can impact mortgage rates one way or the other? What's the next things to come out?
There's minor things that come out. I'm not completely up on it, but I think the market mover, the next market mover, is going to be the June employment numbers, which will come out in early July, the first Friday of July, I believe. So we're a few weeks away from any significant numbers. Every day there's some minor little durable goods numbers or something like that come out, but those are not market movers. But they'll be very interested to see where employment is come the early July report that we receive.
And then the next Fed meeting is the middle of July, and
I believe so. Yeah,
we'll find out more then.
Yep. Yeah.
All right. Well, I appreciate your time. Thanks for the insight of what happened yesterday, where we're potentially headed. And we'll keep our fingers crossed that that those big movers will pile more money into the mortgage-backed securities and cause interest rates to come down to 3.5%.
We can hope so. And I'll be here if they do.
Don't count on it.
What? Can we start a rumor? Hey, I heard. And it all started right here on this YouTube channel. So if you have any questions on mortgage rates and where the market is, if you're thinking about buying a pre-owned home, you're thinking about building, you're thinking about buying a new build, Rich has products for all that. And so his contact information is here on the screen. Give Rich a call. He'd be happy to help you. And if you need help in purchasing your new home, you got three handsome fellows right here that would be more than happy to help you out. Give us a call here at Sell for 1%. And as the guys would say, be sure to like and subscribe to our YouTube channel for more of these kinds of updates. We meet at least once a week with our financial guys to give us an idea of what's going on with interest rates. And then we have a ton of other content here on our YouTube channel. So we'd love to hear from you. Thanks again, guys. We'll see you next week.